Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So another interesting day in the market. We got that initial flush lower again this morning to sort of wash out all the weak hands that were still remaining from yesterday. You might have had some long still hanging on for dear life after yesterday's carnage in the tech sector. And so this morning we got that real harsh follow through to the downside that, like I said, washed out some of those remaining weak hands. We looked like we wanted to put in a red dog reversal in the S&P, and I guess you could say we did, but it wasn't all that convincing. You did see some decent red dog reversal type action in select stocks, which I'll go over here in a minute. But overall, yes, we were able to find our footing a little bit today after some early weakness, but nothing too convincing, and it seems like nothing constructive is happening in these debt ceiling negotiations, so the anxiety and downside could continue over the next week leading up to that deadline that more and more voices are coming out and saying the possibility of default is on the table. But it'll be interesting to watch how that rhetoric develops over the next week or so. Taking a look at the chart of the S&P, like I said, we had that initial weakness in the morning today to have those remaining longs capitulate perhaps their positions. We were able to come back above yesterday's low to trigger that red dog reversal setup, but we closed weak. We went down in the last hour of the session and closed very narrowly positive on the S&P. So as far as red dog reversals go, this is not one that has you screaming that this is a inflection point or a turning point or an area that you want to really get long. We're still below this trend line that was in place from November until yesterday when it was breached. So definitely a key area that we'll be watching. What we say when an index or a stock breaches a major support level like this or a major trend is that we like to see how long it takes the stock or index or ETF to get back above that trend. And so today we have one day where the S&P couldn't climb back above that trend. Tomorrow we'll see if we can get some footing or get some juice after today's small reversal. But when you have positive news like we saw this morning with Janet Yellen finally being named, I guess the news actually came at 3 o'clock, but word got out last night that Janet Yellen was going to be nominated as the next Fed chairman. And that was considered really positive news. She's a dove. She's expected to continue the legacy that Ben Bernanke has created with very dovish, experimental type monetary policy. And so that was good news for the market, but the market didn't really respond all that enthusiastically to it. And that's another sign to be a little bit more cautious. The fact that the market's not taking good news right now and running with it. It's a little bit more pessimistic and focusing a lot more on the rhetoric in Washington going back and forth about the debt ceiling. So like I said, in tech has really been the area of interest in the market over the last 2 days where all the real volatility has been. Yes, we did get a mini red dog reversal type setup in the S&P today, but the action in tech was still weaker after yesterday's carnage, as I've been saying. We did get some red dog reversals in individual stocks, but others remained weak. And we'll use that on a short-term basis to gauge which stocks we might want to be looking to potentially buy a dip and which stocks to potentially look to short on some sort of bounce. And today, the red dog reversals that happened that these stocks could reclaim some relative strength, we saw Google was an example. Today, big travel range, but came back above, closed about where it opened, above yesterday's low, so some constructive action there. And even more impressive red dog reversal today was Apple. One that I talked about in the morning call with Brittany is one that is holding on to its last threads of bullish composure, and it's really stuck in this wedge pattern that'll really determine the ultimate fate of the stock. And today we dipped below that wedge, dipped below the 21-day moving average, which we closed narrowly below yesterday. But then we reversed really impressively back above the 8-day as well as the 21-day. And there's that announcement that came out this morning that they have a product event coming up on October 22nd when they're expected to reveal the new line of iPads, different things they could add to the equation there to potentially boost sales of their iPads into the holiday season. So I think a little bit of optimism about that. And I think general reception of the new Apple iPhones have been positive. So some good things going on with Apple, and technically now with today's reversal, some more positive things going on the chart. Another one that had a red dog reversal today, Zillow. Zillow is one that has had a more calculated down move than some of the other tech stocks that really just saw harsh selling yesterday. Zillow didn't have a great day yesterday either, But today it traded down below yesterday's low, gave you a really tight risk parameter there. Today's low was 75.55. Yesterday's low was 76.25, so less than $1 of risk there on that position. If you played the red dog reversal, and it climbed impressively back above today to put in a little bit of a hammer type candlestick. This is one that I like the product. I don't hate the fundamental story the way I hate some of these other really bloated tech stocks, and I think Zillow is one that could get back above its 8 and 21-day moving averages and be one of the tech stocks that is able to bounce. Sandisk, SNDK, one that we've been listing on off the charts over the last week, had a really wide travel range, didn't have that tight risk parameter on a red dog reversal like you saw on something like Zillow, but held this little previous downtrend line that was in place, came back above its 8 and 21-day moving averages, so really constructive action there. Could have led to some more upside in Sandisk. And in the Chinese internet arena, Sina was by far the most impressive. It gave you a really nice tight red dog reversal today. We'll see what the risk was there. Yesterday's low was 79.81. Today's low was 79.13. So once again, less than $1 of risk on a red dog reversal there, and really nice gains today, taking it back above the 21-day moving average, and now the 8 days in sight for Sina. And Sina is one that didn't break this upper level channel. It's a wide channel, but still held this important support level, didn't even touch it despite yesterday's big down move. So I think Sina is definitely one that's in the game for higher prices going forward. Talking about a few that remained weak today and weren't able to get that red dog reversal type action, most tech stocks did close off their lows thanks to the early afternoon bounce, late morning bounce, but still not very encouraging action, especially after those big igniting down moves yesterday. You talk about Amazon, 3 really harsh down days. On Monday we had the gap and go to the downside. Yesterday, obviously, we got that harsh follow through, and then today, not too much better to close below the 50-day moving average. All the moving averages are now curling down, the short-term moving averages. So, there's a little cluster of support here that held today in Amazon around the 295.26 area. So that'll be interesting to see whether that holds going forward, but that's not really major support at all. The most major support is down here in the 280 area. So if the market continues to weaken and there's no resolution on the debt ceiling, I think that's an area that you could see Amazon test. Another one, Netflix. Netflix remained weak today and did close off its lows, but not too far off its lows. It definitely held most of the day's losses, and it's a very similar chart to Amazon in terms of the gap and go to the downside Monday that's just accelerated over the past 2 days. So it found a little bit of support today at the 50-day moving average, so that'll be a level to watch going forward. But besides that, the only real support, major support that Netflix has is down here in the $250 area. I guess you could say from this previous breakout level, you could look at the 270 area for potential support, but not real strong and definitely very discouraging price action in the last 3 days in Netflix. And then Tesla is another one that's been so strong this year and been so resilient. It did close well off its lows today to keep some hope there for Tesla bulls. It did close back above this pivot support level from October 3rd, but really harsh selling in the morning is not what you want to see. In the morning it held this deeper support level at the 160 area. So like I said, not completely out of the game, but this is one that's finally, for the first time in 2013, extending lower away from its short-term moving averages, and it looks like the music might be at least slowing down. It might not have stopped for Tesla, but it looks like that short squeeze cycle is on hold for now, and this is one that could have some choppy action until it decides more definitively what direction it wants to go. A couple other things to note today. The biotechs is one thing that we talked about being weak over yesterday, along with tech. Monday you got the gap and go to the downside in IBB, which was sort of a red flag. Yes, it did still close below or close above the 21-day after that gap and go to the downside on Monday, but obviously yesterday we had that big igniting bar to the downside, and today, while you had several tech stocks attempt to make a red dog reversal, IBB didn't at all. It did close off its lows, but still a harsh down move today, and a chart that's really looking like it has a lot of technical damage now. The first support level you're going to look at here is around the 187 area, so Not too much lower than today's low. On a short-term basis, you could look at today's low as potential support, and then obviously today's high if you're looking for short-term areas of reference. But weakness in the biotechs, money continues to flow out of sectors that were strong over the past few months since midsummer when that taper talk started. And then that flight to safety trade that I talked about yesterday and this morning in the morning call, XLU, which is considered the most defensive equity sector, it was strong in the morning again. It looked like it was going to extend, and you were going to continue to see that flight to safety, flight to these dividend-oriented type stocks with all this debt ceiling stuff going on. But it closed well off its highs. Not a really bullish candle here in XLU. Yes, it did close higher, and it did outperform the market again, but these two topping tails we've seen the last 2 days definitely doesn't lead you to believe this is going to be some ferocious rally in the XLU. I definitely think it's a very transitory bounce, and assuming that Congress gets this debt ceiling thing resolved, I think XLU could continue to underperform the S&P. A couple other stocks. XO&E. XO&E is one that has been a really big focus for Mike Lee and Steve LeVay in the Trade the Morning mentoring room on T3 Live. It's had really great two-way action. It was weak for the greater part of the last month and a half, but then over the last 3 or 4 days, has been able to improve. And today, I'll go ahead and take a look at a shorter term chart. We'll use the 13-minute time frame, go to the East Coast just so we get the intraday action. As you can see in the morning, big gap up to follow through on yesterday's strength. Then just a huge down bar, the second 13-minute bar of the day to go negative. And then over the next hour or so, goes back positive, makes new highs on the day. Whippy again back to the downside. These are huge percentage moves that are happening at multiple times during the day. So if you're a short-term day trader looking for volatility, and if you're not looking at XO&E, I don't know what you're looking at, but and then found some footing again, rallied, tried to make another new high, got rejected, and then closed very weak to close negative. So this is another one that not really a swing trading idea. A stock that's been so weak on the daily chart's not one that you want to look to buy and hold as a swing trade. It's one that if you are a short-term day trader, if you want to be a short-term day trader in this type of environment, follow Mike Lee, follow Steve LeVay. They're really the experts at navigating short-term price action at XO&E, one that falls perfectly in their ballpark in terms of their ability to navigate high volatility stocks on a short-term basis. Lululemon's one more stock I wanted to point out. Lulu, we talked about how yesterday, yes, it did have a harsh down move, but it held the 21-day moving average, so we're going to give it the benefit of the doubt for the time being. And today it had a little red dog reversal as well. Traded, a tight risk red dog reversal. Yesterday's low was 73.05. Today's low was 72.83, so really tight risk there. A decent bounce, a little bit of a doji candlestick, small body. Got rejected a little bit by its 8-day moving average, but another one that if the market does find its footing, this is a stock that's been strong over the last week and a half, and one that I think could be one of the first ones to perk back up if the market does rally. So that'll about do it for today's daily recap. Again, this is an environment to, I think, take quick trades, not try to make any major swing trading type bets, because we're sort of caught in between two narratives right now, is that the debt ceiling is October 17th, the deadline for resolving that situation. So you could say that anxiety and fear could continue to grow into that deadline, which I think is definitely feasible. But then you also see a market that's oversold and some stocks that are looking to try to bounce, and the S&P was able to bounce a little bit today in terms of off its lows of the day. So you sort of have a market that's caught in between looking for an oversold bounce and people looking to buy dips on these extreme drops that we saw in tech stocks, and then people that are fearful about the debt ceiling. You had news today that Fidelity is selling all of their October, November dated bonds ahead of the debt ceiling situation because I think they just believe that the risk of holding those into a potential default outweighs any potential risk of capitulating those positions now. So I think they're looking at it from a risk-reward perspective, but it's just a red flag that there are more and more voices out there, incredible voices, not like Fidelity, some small fish, thinking that there is an actual possibility of a default based on the rhetoric we're seeing out of Washington. So I don't think it's going to happen, but we don't make money on opinions. Opinions will get you in trouble, especially when you get volatility and really important explosive headlines like we're seeing right now. So I think you continue to take a very stock-specific, short-term approach and keep yourself out of harm's way until we get more clarity and more of a trending market, which is our bread and butter. This has been John Darsie here for your daily recap. We'll see you tomorrow morning with Brittany for the morning call.